years. That's the biggest problem. 100 grand now is worth 20 grand in 5 to 7 years' time because the battery prices, the replacement of the battery is too high.
Generally speaking, the stock market is now 15%.
Well, I said going back about, I think 3 weeks ago that the stock market, the Dow Jones would hit 45,000 points, and we're here today on the 3rd of January 2025. It did get to around about 44,200. So it's come off, obviously, it's over the Christmas break, but the stock market in the US is going to be, we've gone from, as investors, the last 5 years, buying the index in America, buying the index in Australia has served us well. I would say that now has come to an end. I think that stock selection and stock picking is going to be absolute paramount for someone to continue to earn 15, 20, 25% per annum. The indexes have done extremely well up until now, but what you see is a market now that I believe that there's 7 to 8 up to maybe 12 companies in the US or global companies that are now just in the beginning phase. And that's a part of that, our Hamilton Chase's global capital investment fund, which launches in about a month, will clearly focus on the standouts, the companies, so it'll have a very low level of securities, obviously weightings towards gold and fixed interest, but companies that I see that will be, what we saw in the .com. I mean, there was just a bloodbath of companies that weren't valued at anything. It was just rubbish, no substance. But what was interesting is companies like Amazon were just warming up. And, Amazon in the .com crash, 2 years later, Bezos was worth 10 billion and the company was losing about $4 billion a year. Now look at them in 2025. So what I'm seeing is now the companies that I think that they're going to be so robust, and that is in the area of technology, AI, that will, those up to 12 companies, not just the Magnificent Seven, will hold up. They will become the index. They will hold up the index, where the balance of the Dow Jones, which is the top 30, will flounder, I think. I don't think outside of banking, retail, I think those areas, trucking, medical, won't do as well. So it's very sector specific and very fragmented, but hanging on to the index won't be the way to go for the next 3 to 4 years. 2017, 2018 were the biggest runs on the global equity markets under his tenure from 2016 to 2020. There has been a lot more hype. A lot of that is moved around the areas that will be provided funding, the areas that will be, particularly in the areas of digital currency, government coming out now and saying what they're going to reduce a lot of the restrictions with Bitcoin, digital currency. That's driven a lot of the financial services markets, tariffs into the US, which has driven a lot of productivity back into these companies now that will be generating more profits on US soil. And that's driven a lot of those homegrown companies to higher levels. At the same time, I don't think a lot of people actually understand the knock-on effect and the intricacies of tariffs, China and India. What is the outcome of that? I don't think that's played out properly at the moment, but there seems to be a lot more hype and a very positive vibe in the US on the back of that, but a lot's got to play out. And I think, as I said before, it'll be, you know, when I look at car manufacturing, for example, and just the other week that Elon Musk's his net worth went up, I think it was 50 billion, and it just exceeded 400 billion, and because what they'll do to the incentives with EV vehicles, and I thought that was interesting, and I understand that car space pretty well. For example, there's 71 car manufacturing names in Australia today. 71. And there's 28 coming. Now, if we sort of, and Australia's got more brands per country than any other country out of 195 in the world, out of other 195 countries. 71, 28 coming. And then you see the merge of Mitsubishi and Nissan and Honda, 3 moving to 1. So the hype with Elon Musk is a great example. I'm trying to explain this as best possible I can, but the jump in Elon Musk, 50 billion in one day, going to 400 billion on this, Tesla's share price going to that level because Tesla now will be the golden child in the US. That tidal wave, that tsunami, is 500 times bigger than Elon Musk. That Chinese market coming, I don't see how the Tesla's going to compete. So there is a lot of hype there. And I think the Chinese market is just too strong. And you can bring those tariffs in all you like, but the reality is you've got to make them. The product's got to be fantastic, and it's got to be affordable. So no government, Trump, our government, until you can make them affordable and get a battery that is not going to diminish the price of the vehicle and depreciate that vehicle back down to 20% of what the list price was in 5 to 7 years. That's the biggest problem. 100 grand now is worth 20 grand in 5 to 7 years' time because the battery prices, the replacement of the battery is too high. So going back to that, I think you're seeing, and that's just, that story, that example is just one area of the market. I think there's too much hype on what these tariffs will do. The Chinese haven't responded so much at this point. What does that look like? And so I think the hype you've seen in these companies, it'll ease off in the new, particularly Tesla's a great example. But I think where, as I said before, that the biggest drivers will come from other companies that don't have the same issues as the car industry.
And will that correct the stock market?
Well,
how it's going to work?
Well, I think it will. I mean, you know, what happens with someone like that with so much power and control now is Elon Musk came out just 4 days ago and said, look, the car market is what it is. Tesla's now moving into flying cars. Now, when I read that and then dived into that particular article, now Tesla have taken that very seriously. They're actually now going and thinking about that drones and flying cars, that they are rolling those test bots out now between now and 2026. So that says to me that they know they're not going to compete with the Chinese, but Elon Musk has been able to evolve and keep investors and keep the market afloat with his innovation and creativity and his absolute genius. Now, whether that continues on and reflective on the stock market, time will tell. I think it's a bit far-fetched, and I think the companies really to watch are the real innovators, that companies that, I mean, as I've said before, no one's going to catch Apple. It's unlikely that someone's going to catch Apple. Even Tesla decided to bring their own phone out, but Google and Microsoft, even probably Nvidia, and the companies alike, I mean, they're 5 years ahead of anyone else. So I see them as companies now that will benefit from AI, and I think you'll see those 3 or 4 companies, probably 50% increase in capitalisation in the next certainly the next 3 to 5 years. Them alone. They're just ahead of the pack. The innovation is one thing. It's about the speed and the speed of entry to the market, being able to process that and actually then being able to copy and obliterate. That's what that is, and that's exactly right. The ones that are undercapitalised and the penetration to market, opposed to the other ones that can see it, process it, and then roll it out and facilitate that a lot quicker and a lot better, and a much better product. That's been part of business and capitalisation, I think, for probably 100 years. Who can do it faster and better? And I think that, going back to what we were saying before about the Chinese, I think that they've just got that. They've got their own market. They've got their own 1.32 billion people to go and to distribute to, rather than even before we go into the Western market. But I think that's right. I think you are right. There have been companies that have been able to do it a lot better, like what Apple did, opposed to Nokia. That's a great example. I mean, Nokia were around a long, long time before Apple, and Apple really came to the market, 2006. And just did it better, and look at them now. I think that the market, my personal view that this year will be, I'm more excited about the 2025 than I have been in looking at investments, broad investments, from shares, equities, property development. In our world, we have hard assets, real estate, paper assets being stock, and cash. So cash, paper assets being securities, and real estate. When you look at the whole spectrum of investments, cash, fixed interest, shares, local shares, international shares, property development, gold, silver, Bitcoin, options, currency, credit debt swaps, all of these other instruments that are out there, I believe now that the 2025, 2026, 2027 will be the most exciting and the most innovative space. And as an investor, it's personally where I'm going to be more focused, particularly on our Hamilton Chase Global Fund, and myself personally, investing into those companies. I think I can do a lot better and get a much better rate of return on wonderful companies that are out there today, investing into great businesses and being a part of businesses, than what I can do on my own and what I can do in construction. Now, if I've got to earn 20 to 25%, I can't do that anymore on residential, on construction. It's very hard. In industrial I can, but it's hard to get that kind of rate of return. So for me now, at my age now, I've decided that, and the timing and I'm very excited about it, that I think next year, this year, next year, I'll have my most productive years, profit on cost, because I've got a very, very good understanding of companies that I want to be invested into.